he was very definitive about a plan coming soon to end the balance sheet runoff. He was more definitive, I think, than he's been in the past about that. He said we are definitely not changing our inflation target. We're trying to communicate better, so that was important. Third, I think, was an interesting thing to watch over the past 2 days, Kelly, about how much concern there is, both from Democrats and Republicans and in the Senate and the House, about banking mergers and banking regulation. That was the big topic that kept recurring, and you have two different ways this is happening. One is from rural Republican senators that are concerned about bank mergers, and the second, I think, is more from, say, Democrats from the urban areas. And so they seem to be united on this. I was watching the stocks of BB&T and SunTrust and the regional banks. I didn't see much change. I don't think this particular one is an issue, but I don't want to be the bank executive negotiating the next bank merger, given what I heard today, the tenor, the political tenor about banks right now.
So, Rick, before we go down that path, what did you think as well about the comments from Powell, especially with regard to the balance sheet, the inflation targeting, and how is the 10-year responding to all of that?
Well, first, let me go in reverse order. With respect to the banking issues, you remember yesterday I talked about, after the hearings were over, that I thought the news was how the politicians on the Senate side had a certain stance with regard to the Federal Reserve that didn't really include monetary policy. Steve agreed with me. He just took a different angle. And it's the same here on the House side. It's about banks. My own feeling is, and this isn't meant to be giving you insight into how I think or how things should go, but I think the Democrats really want more control in the bank because they want to use it in more of a social settings, if you will. Right. Remember, Tom Perez is now head of the DNC. When he was Secretary of Labor in 2014, he tried to use disparate impact studies to pressure banks to make loans that they didn't think they should make, which was at the heart of the credit crisis as well, because it made a lot of blame to go around, but it made banks lower the bar to lend. Rick, and I think that's kind of at the center of this in both chambers, and I think it's a disturbing trend because its end game is the Federal Reserve.
The interesting thing, is what Steve alluded to, Rick. Why do you think the share prices aren't moving more in reaction to that? Because certainly, if you're an investor in these banks, wouldn't you be concerned about things headed in that direction? They seem to be shrugging that off.
No, because I look at it just like the big socialist move. And the country could move any way it wants as long as it follows the rules. But I think it's a movement that has very little potential for actually making relevant change in the here and now. Maybe in the grander picture it will, but that's why I don't think
Kelly, the reason might be is that Trump-appointed officials will approve or disapprove this merger. It's not up to Congress. The concern is the political heat you may get.
Right,
and just to push back a little bit on Rick,
the Trump administration itself has its own populist leanings at times. So it's fair to ask
but
the
question. They've been very pro-Trump in terms pro-bank in terms of how they think about regulation. But I will say, just push back a little bit on Rick, this issue of rural Republican senators also on this issue, they do not want to see banks in their communities closed down. And
let me bring in Michael Arone on that. We've been following here a lot of the movement banks have had towards mobile apps instead of branches. Whether that helps, Steve was doing, you saw this in Mississippi, whether that helps or hurts in the long run, I'm not sure. Michael, what are the markets going to do in the meantime with all this talk about the balance sheet and the size it will remain at, and Powell not saying they're going to necessarily go higher than the current inflation target?
I think the big takeaway for me the last 2 days is that the Powell put lives and breathes and is well. So in reaction to what was an incredibly volatile period at the end of last year, Powell came in this testimony and assured markets that they would be patient, that the balance sheet was going to be much bigger than it was previously, and the path forward on the balance sheet is likely to be a lot slower, if not even stop. So despite the fact that fundamentals for the market continue to deteriorate some, it seems as though the Fed is willing to kind of keep the punch bowl at the party for a while longer.
So you tell clients to stay long, stay in equities, stay long, stay long. Bonds, rates aren't going any higher.
I would even suggest that the fact that the Fed is going to support financial assets. So it seems as though that the interest rate that the mainstream economy can handle is probably a bit higher than what the financial markets can tolerate. And the Fed, it looks like they're going to lean a little bit towards the financial assets. And I think Powell over the last 2 days continued to stress the idea that inflation is likely on the back burner for a little while.
Yeah.
He talked about oil prices. And so I think he continues to suggest that inflation is not, or breakaway inflation is not a challenge currently. And that's going to keep rates low for a while.
Omair, you agree with all that?
Yeah, especially the last part on inflation. I think if you go back to the press conference in January, Powell was asked about what would it take to get him to hike rates or the Fed to hike rates later on this year. And he actually said, I'm going to need to see an argument for rate increases. And a big part of that for him was inflation. And right now, it doesn't look like inflation is really a threat even moving forward. So what exactly is the need for rate hikes right now? So why not be patient, as Michael pointed out?
Rick, what do you make of that?
I agree. I guess the one question nobody is asking is that I fully understood that when you had QT going on a parallel track in real time with rate hikes, that might present a problem, especially with so little knowledge on the impact of balance sheets up or down in history. But nobody's mentioned, if we're on a pause on rates, why shouldn't we drain the balance sheet more? I think the more normal we get, the better, although I like the place Powell's in right now.
So Rick